Hello, welcome everyone. Welcome to this week. We're starting the week off a little later. Monday was MLK Day, so markets were closed Tuesday. I had just landed at I got home pretty much in Europe at 9:30, so I just jumped into the room right away. So apologies for that, but today we're starting the update for the week. It is Wednesday, and so far the markets have pulled back a little here. Yesterday, we saw that we had some kind of downside momentum on the move, and today we're getting yet another gap lower into some key support. So we'll talk about the areas that we sit at, where we're at, what that means, and what that could present in terms of opportunity. But first and foremost, I do want to talk about some of the other, I guess, foreign markets, right? Because China looks pretty interesting here. Let me just, what was it? The this Hang Seng Index. So we'll put that up, right? Hang Seng Index doing pretty poorly here. Realistically, it's been on the drop for quite some time, as the Chinese economy has been in very questionable conditions recently, and we'll talk a bit about that today, as a pretty large historical shift continues to take place in China that is impacting both the domestic and the global economy. So, according to the National Bureau of Statistics, the nation's total population fell over 2 million people in 2023 to 1.41 billion, marking the second straight year of contraction. Decline also more than doubled than seen in 2022, when the Chinese population shrank for the first time since the Great Famine during the Mao Zedong era of 1961. So, China has long been a key source of labor and demand, but its birth rate has continued to decline as couples delay or decide against having children. That's despite the lifting of the government's one-child policy in 2015, and incentives rolled out in 2021 that encouraged people to have more babies. So, tax deductions, housing subsidies, and longer maternity leave were some of the aspects. Sky high education costs have also led to one of the lowest fertility rates in the world, as well as a trend towards urbanization in a country that has traditionally been very rural. So, somewhat of a bright spot was seen in fresh data overnight on China's GDP. Growth expanded by 5.2%, but the market doesn't necessarily reflect that. As we've seen, the Hang Seng, the futures here have been on a very steady decline for quite some time now. So the official target, right, was around 5%, so we got to beat that. Others are not necessarily convinced, as the figure is still way lower than the historical growth rates, and has consistently failed to meet expectations for strong post-COVID pandemic bounces. So, among pressure are weaker consumer and business confidence figures, mounting debt problems, and spiraling property crises, as we've seen multiple cities with just abandoned buildings left, right, and center in China. In fact, the mainland China stock market was one of the world outliers last year, and the benchmark CSI 300 index of major Shanghai and Shenzhen listed stocks sliding around 20% compared to gains that have been seen across the world. So we can check that out as well. Where is it? So you can see it continues this slip throughout 2024 as new lows continue to be tested. The last time we saw an all-time high on this was back in 2021, and ever since we've been on a very, very strong decline, losing, it looks like, over 50% of its gains at this point, right? So if we pinpoint that high, it's down, or I guess I calculated wrong, down about 45% of those gains have been lost. So looking for growth and looking forward, it does seem that China is one of the I think it's been beaten up a lot and can have a decent opportunity throughout this year. The demographic trend calls into question whether China will get old before it gets rich, as deaths outstrip births, and Beijing has rolled out plans for a so-called silver economy, which is estimated to be worth 30 trillion yuan, which is $4.2 trillion by 2035, to account for about 10% of the GDP. So services include meal delivery and entertainment to nursing homes and elder care, as well as industrial parks that will support products for senior citizens to encourage development. Banks will also be enticed to extend credit to businesses involved in the silver economy, while local governments will also be able to issue special bonds to finance these transitions. So we can see that based on a chart figure, right, the numbers in front of us, that the Chinese economy doesn't seem as strong as these GDP figures claim to believe, as we've seen now multiple of the Hong Kong and the China mainland markets have been down very drastically over the last few years now and continue to slip out. So there looks to be a potential opportunity in it, right? I still am interested in KWEB, some shares in China here, kind of just like a punt to the upside as they've been beaten down aggressively. I think that there could be some slight transition to flip this thing around, even just a bit, to see some kind of upside this year, but these figures aren't necessarily looking that great. In terms of AI, we got some news out of the US military, right, with OpenAI confirming a collaboration on cybersecurity tools as well as software to deal with high rates of veteran suicides. OpenAI announced a partnership with the Pentagon during the World Economic Forum in Davos, just days after it removed language from its usage policy that forbade the use of the technology by militaries. The company, which is backed by Microsoft, previously had a ban on activity that has high risk of physical harm, including weapon development and military warfare. Note that Microsoft is an established contractor with the U.S. military as well. And Microsoft is one of those names that has been reaching for all-time highs continuously in the midst of this downturn in the most recent, well, I wouldn't say downturn, but slight topping in the overall market, which tech, right, you can see Microsoft is gapping a little lower right now, but tech has been just continuously holding on to a lot of its gains, which I think that there is still the opportunity and possibility a little later in this year to see that slip up and give back a lot of the gains that were made in the prior year. Another thing to talk about is the merger of Save. This is one of the things from Spirit Airlines, down another 10%, right? And it's down aggressively from yesterday. Down about 47% on Tuesday, dropping from about $16 all the way down to about $8, and now down about $6.50 continuously. And a federal judge blocked the carrier's antitrust grounds. It was planned to be sold to JetBlue for $3.8 billion, and in a move that could result in Chapter 11 bankruptcy filing. So the Department of Justice previously sued to block the merger in March, after which JetBlue attempted to appease the agency with a divestiture plan involving Allegiant Travel and Frontier. So the latest news has also triggered fears amongst the merger and acquisition traders over Alaskan Airlines' nearly $2 billion deal to buy Hawaiian Holdings, especially after that door flew off. So that's mainly what we got going on here. We can also take a look at crude oil before we kind of wrap this up, because of what's happening in Yemen, in the Red Sea, as we've seen. The U.S. has now redesignated Yemen's Houthis as a foreign terrorist organization for what's happening in the Red Sea. And, right, oil has been pulling down from some of these headlines. Now, generally speaking, in situations like these, you generally expect oil to be popping rather aggressively. And this oil rotation and sideways action into these lows, even for, right, it looks pretty attractive for the longs, but the fact that we haven't started this rally higher with what's happening in Yemen is a little concerning for oil bulls, as we're kind of holding this thing back right now. But I do still like it for the medium term. To the long side is just looking a little frisky here. Let's see here. We'll add this. We'll take a look at the S&P 500 futures, because we're at an important space right now. And overnight, we've seen that yesterday's rally into the close just got reoffered. We've created what looks like a B-shaped profile here on the overnight, and right down into a key distribution block low, which puts us into these 48, 60s, 67s. That mid to low 60 area becomes the final chance for the longs to come in. Otherwise, we're starting to get a larger pull down in this market, which would start the downside rotation that could bring us down to the 4600s or so, which is, I'd say maybe we got another 100 point, 150 point drop to the downside if we start giving up these levels, especially into the close. Now, one of the things that is keeping me from being like extremely giga bearish on this, despite the fact that we've pulled lower, is that we still have OPEX that comes out on Friday. I think we get some wish-washy sideways movement and some wonky stuff happening where dip buyers come in before we start selling the rip into next week. That's the way I'm looking at this. I think there's still some auction to be cleaned up to the upside before we start seeing some of these sellers come in. NASDAQ and tech is still pretty strong, and I think that those rallies get sold, but I think it's going to be a bit harder to just completely break down for today. Now keep in mind, 48.85 to 48.88 is a massive area where we failed on the overnight, and we could see a continuous fail throughout the next few sessions as well, right? And if that holds, we're probably going to see legs lower realistically. So I'm looking for an initial pop on this market off this open to see if we can get a rally a little higher, clean up some of the auction, then we'll kind of see where prices tend to get reoffered for a larger pullback that could kind of shape up over maybe, I think, next week, maybe into the end of this week. It's mainly what I'm looking at. Morning, guys. I hope everyone enjoyed this. This was the breakdown that I wanted to go through. We're also going to be launching a webinar next week, right? You'll have more information on that. A webinar next week to get ready for 2024, how to start the year off right, and learning from the first month of trading of 2024 what we could expect going forward, and right, how to really get off on the right foot. So for more information on that, right, just keep watching. We'll have more info, especially on our website over the next few days, and that's going to be next Thursday, January 25th. So I can't wait to do that live with you guys, and I'll see you all there. So with that being said, let's open up our live trading room. Let's see what we got cooking today. Had a few NASDAQ and S&P trades here on the pre-market, but still looking for some of that upside off of that high 60 realistically. That's what I'm gunning for to start the session. Mid to high 60 on the S&P 500 futures to see if we can get that profit-taking rally, and then we'll readjust from there as we get into that mid high 80 and see what happens from that price. So yesterday, interesting movement, and remember we have OPEX coming out on Friday, which could be wonkier movement in general. So I'll see you guys then. Let's open up our live trading room. Check out TRADEPROacademy.com, and we'll be back tomorrow.